So as we discussed in yesterday's live recap, the market was primed for a directional move one way or the other, and in the overnight session, we saw that sellers held ES below the 6,094 to 6,100 resistance, and then following the CPI number, we saw a directional move to the downside that so far has resulted in a test of the 6,025 high volume node. Now, given the weakness that we've seen in the pre-market session, heading into the open, our short-term bias will be neutral bearish, while the intermediate continues to be neutral bullish. And the main question is whether this downside directional move is now going to result in any kind of follow-through. And in order for that to happen, we need to see a breakdown below the 6,014 to 25 initial support on signs of initiative selling. And simply a lack of weakness or a lack of downside momentum at one of the support areas below can attract responsive buyers. On the upside, we have initial resistance at 6,052.5 to 62.5, followed by 6,066.5 to 75.5. And if the market is really weak, then ideally we want to see sellers holding ES below the initial resistance zone, but in order for the intraday bias to turn bullish, we will need to see a breakout above initial resistance, as well as 6,066.5 to 75.5, and then above that we have the key high volume node at 6,086 to 88, followed by the bias confirming zone at 6,090 to 6,100, and we'll need to see signs of initiative buying in order to get a breakout above 6,100. Now again, given the level of weakness that we've seen in the overnight session, ideally we hold below initial resistance, but even if the market holds below 6,066.5 to 75.5, there would still be potential for the sell side to regain intraday control. But in order for the sellers to remain in control, ES needs to hold below the initial resistance zone. And then on the downside, we have initial support at 6,014 to 25 and a break and hold below that area on broad market weakness, and sustained downside momentum would serve as an intraday bearish confirmation, and that can then open the door for a test of 6,002 quarter to 8 quarter and 59.87 to 97. And on the downside, the market would begin exhausting the range potential by the time it reaches 6,002 quarter to 8 quarter, and 59.87 to 97 is another bias confirming zone, and the range would already begin getting exhausted, so there is a relatively high probability for buyers to step in at 59.87 to 97, and we will need to see trend down type conditions in order to take that area out. Now, in order for the market to push all the way down there, we will need to see continued above average volume and trend down type conditions. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the initial support and the initial resistance zone. That's going to help us determine which side is in control on the day time frame, and we'll take it from there.